Hi everyone, welcome back to the channel Financial Radio. In this video, we will discuss about the important updates we have today in the live market. Today we have an interesting update from Reserve Bank of India regarding 10 years benchmark bonds. Reserve Bank of India is about to launch its 10 years benchmark bonds. We will discuss the details in this video. And we also have an interesting update regarding LIC. LIC has received income tax notice today from the government. So we will discuss the details. And we also discuss about digital healthcare sector, the losses faced by digital healthcare sector. So before going to that, let's check Nifty 50 and Bank Nifty closings. Today Nifty 50 closed at 21,661 points. It made a day high of 21,755 and a day low of 21,555. So it's a 200 points range from day high to the day low. So initially in the morning Nifty opened gap up, and after opening it took some consolidation, and after that it broke the support which was formed yesterday in the level of 21,680 as we discussed in the video. So after breaking that support, Nifty again retested the level and take resistance from the same support which was broken, and after that the selling continued till the day low of 21,555 points, and after that Nifty gave some buying momentum and slowly the recovery has been seen in the Nifty and also reached the resistance which was previously acted as support. When coming to Bank Nifty acted differently. After opening gap up, the first candle covered the gap and after that a bounce has been seen which formed a new day high in Bank Nifty. The day high is 48,223 and the day low is 47,689. And the closing price which is nearby to the day low is 47,710 points. So after the opening and previous consolidation, the Bank Nifty then break in the previous support of 48,000 level, and after breaking that with a good red candle, it made a retrace and after that the selling continued. In Nifty there has some buying momentum, that means a retrace has been seen, but in Bank Nifty there has been no reversal or recovery. The selling has been continued till the day end, that is the day low. As said earlier in this video, we will be discussing about the Reserve Bank of India's potential announcement of a new 10-year benchmark bond. According to the experts, the current 10-year benchmark bond, the 7.18% 2033, has reached an outstanding amount of 1.53 lakh crore rupees, triggering the likelihood of a new bond issuance. Abhishek Baishan, head of fixed income at Kotak Mutual Fund, explains that the issuance of a new benchmark bond is a common practice when the outstanding amount of the current bond reaches 1.5 lakh crore. A benchmark bond sets a standard against which the performance of other bonds can be measured. It provides stability and reference for the market. Experts predict that the auction for the new benchmark bond will take place on January 12th using the multiple price methods. Successful bidders will pay at the rate they bid. The coupon for the new 10-year benchmark bond is expected to be in the range of 7.15 to 7.17%. This is 2 to 3 basis points lower than the prevailing 10-year bond yield on the auction day. Mata Prasad Pandey, Vice President at Tata Capital Service, suggests that the bond may fetch a discount of 2 to 3 basis points over the yield on the current benchmark bond at the time of issuance. Marzbani Irani, Chief Investment Officer at LIC Mutual Fund, notes that the coupon for the new bond is market determined and might be in the range of 7.15 to 7.25% as of today. In August 2023, RBI issued a new benchmark bond with a coupon rate of 7.18%, maturing in 2033. The central bank initially issued bonds worth 14,000 crores. In Budget 2023, Finance Minister Nirmala Sitharaman announced that the central would borrow a record 15.43 lakh crore in 2023 and 24 to finance its fiscal deficit. The money market dealers predicted that the Indian bond yields, especially the 10-year benchmark, will trade in the range of 6.90 to 7.30% in the January-March quarter. Factors such as expectations of a US Fed rate cut, domestic inflation, RBI policy stance change and FPI flows and expected to influence bond yields positively. In conclusion, the financial landscape is dynamic and the announcement of a new 10-year benchmark bond by the RBI brings both challenges and opportunities for investors. Now we have an interesting update from Life Insurance Corporation of India regarding its GST notice. Life Insurance Corporation of India has been slapped with a goods and service tax notice worth a whopping 805 crore rupees. This comes just after a month after receiving another GST notice from the Telangana government. Let's dive deep into the details. Shares of LIC fell by 1.44% in early morning trade after the state-owned insurer received a GST notice of 365 crore rupees, accompanied by penalties and interest totaling 440 crores. The Deputy Commissioner of State Tax in Mumbai alleges that LIC violated rules related to input tax credit. This is the second time in just over a month that LIC has received a GST demand notice. On December 11, 2023, the Telangana government issued a notice for 183 crore rupees covering pending dues, penalties and interest for the financial year 2017 and 18. LIC insists that it will file an appeal against the recent notice within the prescribed timelines. It's interest to note that LIC received a 10-year exemption last month to achieve 25% minimum public shareholding, providing some relief to the company. The LIC shares opened with a 1.39% gap down at 852.10 rupees and reached an intraday low of 844 rupees, down by 1.6%. Currently, the script is trading at 846.80 rupees, down by 1.8% from its 52-week high on January 1st, 2024. The government's exception allows LIC to comply with the minimum public shareholding rule by May 2032. In the past year, LIC stock has provided a return of 19.39% with a 6-month return of 34.64%. Despite the recent challenges, LIC shares have surged 17.8% in the past month and 7.22% in the past week. Looking at the financials, LIC reported a 50% decline in net profit at 7,925 crore for the second quarter ending September 2023. Net premium income fell by 19% year-on-year to 1.07 lakh crore. However, gross non-performing assets declined to 2.43%, showing positive signs. In conclusion, LIC is facing significant challenges with the recent GST notices impacting its stock performance. However, the company remains optimistic about its financial outlook. Now we'll be discussing about a recent report by Tata Capital that sheds light on the financial challenges facing India's digital healthcare sector. According to the report, companies in this sector, including online pharmacies and digital fitness apps, are grappling with a severe cash crunch with less than 9 months of funds remaining. The digital healthcare sector, valued at approximately $6.5 billion, is facing this crisis due to a lack of private capital funding and a high rate of cash burn. The report, based on an analysis of 120 companies, highlights the struggles these companies are facing in achieving profitability and sustaining growth. While some companies are working towards profitability, the report emphasizes the uncertainty surrounding the impact of the funding crunch on the sector's growth in the coming months. Despite corporate backing, high customer acquisition costs and low customer retention, commonly referred to as stickiness, continuing to pose significant challenges. Over the past 5 years, the e-pharmacy segment received about $2 billion in funding. However, even major players like pharmacies have faced a 90% valuation correction after a failed initial public offering. Corporate-backed pharmacy platforms like Tata 1mg and NetMeds are pursuing growth but are sustaining losses. To counter challenges, the sector is now pivoting towards an omnichannel approach. NetMeds, for example, plans to open 2,000 offline pharmacy stores within the next 12 months. This shift aims to create a more integrated and seamless experience for consumers. The pharma analytics segment, with over $2.8 billion in recent funding, is showcasing stability and growth potential. Companies focusing on healthcare IT with stable EBITDA margin and are attracting buyout funds. Meanwhile, the B2B hospitals supplies sector have secured over $200 million in private capital since 2015, is transitioning from unorganized to organized operations and expects over 20% growth. Telemedicine, despite receiving $250 million in funding over the past 3 years, faces challenges due to a high cash burn model. Companies like Practo and MediBuddy are struggling to establish profitability and are diversifying into subscriptions, offline healthcare delivery, and diagnostic tests. The fitness and diet sector are also grappling with profitability challenges, with companies like Healthify Me and Fitter currently in the red. The report concludes that the chronic disease management service companies face scalability hurdles, need to improve their business models to overcome the challenges in the sector. And that wraps up the overview of financial crisis in India's digital healthcare sector, as highlighted in the Tata Capital's recent report. If you really found this video helpful at any point of time, don't forget to like this video and also subscribe to our channel Financial Radio. Thanks for watching.